Hello to another episode of Market Masters. I'm Prashant Nair, and with me, my colleague Nigel D'Souza. We're honored today to be joined by investment legend Raamdeo Agrawal, chairman and co-founder of Motilal Oswal Financial Services. He's here with us in the studios. He is, I think, without doubt, one of the sharpest minds in Indian equity markets and a voice that has shaped how millions invest. In this episode, we turn our spotlight to two very, very important topics. Nigel.
Well, that's right. First, the sweeping GST reforms announced by the Prime Minister, which promise to transform India's financial landscape by streamlining indirect taxation, boosting compliance, and unlocking new avenues for economic growth. Second, we dive into Raamdeo's view on markets' current outlook, including the keen interest in emerging sectors like the quick commerce sector.
Well, absolutely. And I think we're going to divide it neatly into two parts. And it's going to be, of course, markets in focus. Raamdeoji, thank you very much for joining us.
Very good morning.
And you were joking that probably the first time that you were on time in the studios. Otherwise,
yes. Every time I used to be stuck somewhere, but first time because the traffic is so
all this
small.
rain and...
There is no traffic, actually. So you don't face the Worli Naka blockade and all. Straight we drove through.
The market is facing lots of headwinds, though, right? Lots of traffic.
No, you're almost close to 4-5% below all-time high. What more can you ask for? Okay, we may not be the best market for the current year globally, but on 3-4 years basis, I think we are the best markets.
Right.
And who knows about the next 6 months? We might be the best market.
It's absolutely possible.
Yeah.
Because we've not done anything compared to other markets over the last 6-7 months. So maybe near-term road ahead is better. But, you know, what is driving markets right in the very near term, let's just address that, is the Prime Minister's promise that he's going to tackle GST reform in a big way. Yeah. Also, next generation reforms.
Yes.
There was that meeting which happened with economists, etc. I'm told it's the first meeting by the Cabinet Committee on Economic Affairs with the Niti Aayog, top economists, etc. The last meeting happened in July of 2020. This is after 5 years this meeting has happened. And I spoke to a bunch of people who attended that meeting and they said, well, the intent seems to be there. So let's just address both things. One, on the GST front, what you think, I mean, will the simplification of, what are you looking for? What will really drive, businesses in a sustainable way?
Yeah, so what will happen in October, November, December, as a Diwali Dhamaka and all as promised by our beloved Prime Minister. So that's one thing, whatever comes through. But actual opportunity is massive. Okay, we are against the wall. Our local economy is slowing down. If you look at, various high frequency, including GST itself, collection 1-2% kind of a net collection growth, your corporate direct tax collection, housing loan growth, which is crazy thing. This country is without houses, and that has grown at about 2-3% only. So clearly, we are in a slowdown mode. And see, the world respects the growth. And today, trade has taken over even politics. What is the strength of US today? They're the largest consuming country. And that's why the whole world is trying to sign anything to access that market. Because it's a 25-30 trillion market. Okay, so how do I become very attractive market? Now, overnight, I cannot become from 4 to 10 trillion. It takes time. But the growth pace, this is a story of the country. So that should not slow down. I must keep growing at about 6.5%, 7, 8% relentlessly, without break. The power of compounding comes when you don't break the compounding.
Correct.
You cannot do for 5 years, say, 3%, and then suddenly 2 years for 10%. That doesn't work because the compounding is much lower. So the real thing is, and the mechanics of doing that, of course, our policymakers, our fiscal, monetary regulators, they all understand this. They're brilliant guys. So I'm sure this opportunity in the slowdown, we are against the wall. We have to come out. Now, we should not do incremental changes. This is an opportunity to do real clean sweep.
Yeah.
Brilliantly, we have executed GST with all the complications, and we have got this collection. We have brought entire real estate, RERA and all. So a lot of reforms have happened. IBD has happened. Now this is a time against the backdrop slowdown to really, in a very comprehensive fashion, do the reform in such a way.
We'll break it into two parts. But on GST, when you say clean sweep, when GST was introduced in 2017, the idea behind it was to keep a low enough rate, keep it simple, and that will lead to tax buoyancy, right?
No, I think at that time, if I understand correctly, they tried to copy whatever was the collection happening at that point of time. Say, if I'm paying 28% in cement, let me charge 28%. And
no, I'm saying the idea of
idea,
GST,
of course,
what was implemented,
yes,
of course, and then it got further complicated over the last 5 years.
No, not complicated. See, see, first was the transition from the old system to the new system, which has happened. So that is a one generation reform itself. Now, second generation reform is how do you make as a tool of development, GST to be a tool of development. How do you actually...
So specifically with GST, what do you think should be done? When you say clean sweep,
as simple as possible. Like,
should go back to the idea, which was to be...
yes. So 515, why 518? You know, got to see, there will be one-time revenue loss of some 50,000, 0.5% here and there, 0.5% of GDP per se. But one-time revenue loss will give you buoyancy for the decades to come. So this will actually, see, look at any industry. You have to make the taxation in such a way, particularly indirect taxes, where the avoidance is far more expensive compared to the tax rate itself. If my avoidance cost is 5%, your tax is 18, there will be wholesale avoidance. You know, I met one revenue official, IS officer, he told me that the moment you made it to 12 lakhs, it is such a brilliant thing. All the small traders, those who file marginal return, they will now file for, instead for 6 lakhs, they will file for 9, 10 lakhs. So much more will come into the system. So this is how it is going to happen. That if you keep bringing down this thing, you will encourage consumption, and consumption will give higher taxes. I am not for lower taxes. I am for actually collection of higher taxes at lower rates.
You're saying time for tinkering is done?
Yes.
Gone?
Yes.
It has to be...
Actually, it should be a shock. And in fact, I'm still skeptical of what will come, you know, knowing the past track record of what comes. But this is an opportunity for our government to surprise people.
Hi, Mr. Agrawal. Good to have you in the studio. And, you know, initial comments, you said India is back against the wall, but we perform best when the back is against the wall. And now we have these measures that are coming in there. Yes. And I think you're hinting that you're batting for 5% and 15% rather than the 5 and the 18%. That would be better.
Yeah, that's my sense. It looks nice,
yes.
You know, 5 and 15.
Okay. All right. So you think the GST reforms will be enough to spur that consumption growth that we are looking forward to? First half of the year has been very soft, maybe softer than most estimates. But with this tinkering, do you think it's enough to get us on our way? Monsoon's going to be pretty okay. You know, we have festive season that is early as well. And now you have this GST rationalization. Good enough?
Yeah. So, Nigel, we need Lollapalooza effect. What is Lollapalooza effect? When you work from every possible way. You work on the regulations. You are all the regulators. They should open up the gates because they don't have taxation power, but they have massive regulatory power, and that can do a lot of wonders. All kinds of deregulation. Why should government come on the way of doing businesses? You must worship the businesses, you know, particularly the ones which are clean. You know, so how do I make ease of doing business? Absolutely the first this thing. But coming to the taxation, you know, this will go big way. See, because I'm a poor country. Let's not forget we are not a rich country. My masses who can consume doesn't have much purchasing power in the hand. Now, the guys who are limited purchasing power, you tax them at 18-20% for the consumption goods. Or maybe a lot of things are not taxed only, which is also wrong. A lot of zero tax is also wrong. You got to bring them to 5%.
Right.
Okay. But the guys who actually have money like you and me, we are being taxed like at 28, 40, 50%. Boss, do you want to punish me? That's the objective. Or do you want to collect more taxes? You bring it down to 15 or 18%. You see the level of consumption will come from the people who can consume.
Yeah.
Let's see the guys who can consume. See, it's only top 20-25% people can consume. But if you tax them, if you make their $1 earnings,
consumption will.
Prashant, $1 earning of my guy buys nothing here. Compared to you go to Dubai, you go to US, it buys tons of things. So we have to make sure that a dollar spent in India buys maximum. In services, it buys maximum. That's why we are king of service exports. Like that, in manufacturing, you go to China, you look at Chinese toys. For $400-500, the kind of toys they deliver you at home is crazy. It's not that they're making losses. The issue is that how do you, see, by giving some tax concessions and all, you are doing nothing. You are actually getting the scale economics. As you get a scale, you are able to afford very low rates. I'm coming from an industry which has seen the most stupendous growth anywhere in the world. Forget about India. We started in 87. That time the total turnover in Bombay Stock Exchange was 200 crores per day. How many brokers? 500 brokers. Okay, and they were settling. And what is the brokerage rate? 1.5 to 2%. I used to charge 1.5, but the general rate was about 2%. So 1.5, 2%, 200 crores turnover, T plus 15 settlement, and everybody used to labor how to settle it. Today, it is 400 lakh crores turnover, 400 lakh crore daily turnover, and T plus 1 settlement. Market is completely safe. And look at the GST collection.
Yeah.
70, I think 60, 70,000 crores of, what is, not GST, what is that they call it? Securities transaction, STT collection.
STT, yeah.
60, 70,000 crores. So that is possible because my brokerage rate is not 2%. Now it is 0.0,
yeah.
1 or 2 basis point or even 0.
Yeah. Let's break it down and we'll sort of come to market specifically. But GST, if what you're skeptical, as you said, and we should be given, I mean, how it has happened, but the time to do it is now.
Yeah.
If this were to happen, right?
Yeah.
What you're imagining, which is real simplification and not tinkering.
Yeah.
Where will this show up in a big way? Sectors?
See, in the manufacturing, where exactly it will show up is in manufacturing. Because if you keep it 18, then services are more or less at 18, so there I don't see much of change. But in manufacturing, and of that 40-50% is automotive. Now if you, now you should not do tinkering. What I mean tinkering is that motorcycle will be at, 100cc will be below this, 150cc will be there. I think they should not do that. They must bring down the whole damn thing down.
And they're famous that...
Yeah, sir, 5,000 rupees to that.
Yeah.
Keep it simple. Just bring it down. Bring it down to the level that even the associations will not demand.
You're saying autos perhaps?
Prashant,
Yeah.
I think the simplification is important. That if you have one rate for low rate for anything, you'll get much more compliance and much more collection. I'm telling you very clearly, I'm for higher taxes, higher amount of tax collection, but at lower rate.
Right.
So we got to play that gamble, and it will happen, and evasion will stop, compliance will increase, and in any case consumption will spur because my income is not going down.
Yeah, no, absolutely.
So what are you saying?
No, I wanted to ask you where it will show up. You're saying auto as a manufacturing, and within that autos.
Cement is 28%.
Yeah.
That will immediately come down to 18.
Yeah.
Okay, then auto, which is at 28 plus, will come down to 18. It will actually look at, this country, what level of penetration you have. You sell some 3 lakh, 4 lakh cars. You sell some 15, 17 million motorcycle. What is the penetration level? I think total penetration of even the motorcycle, 10 years included, will not be more than 20-25%. It should be at least 60-70%. There's so much to do in motorcycle itself. And why we are competitive in exporting to the world? If you want to become actually competitive exporters, it will happen if you have the most competitive domestic market. So you can't, where is my tourism? Yeah. Nowhere. Because my holidaying cost is so expensive, 50-60,000 bucks for a room night. You go to Phuket and all these places for 5-10,000 bucks.
Makes us across the board more competitive.
Yeah.
Absolutely. Raamdeo ji, stay with us. We're going to take a quick commercial break here. We'll come back and we'll do 2 more things. One, we have to ask you about markets, and quick commerce is, I think, a favorite theme of yours.
धमाका होने वाला है.
But आपको GST के अलावा और क्या करना चाहिए वो बात करेंगे. Let's just take a quick commercial break here. So we continue the conversation here with Raamdeo Agrawal.
Welcome back. We are in this special conversation, Mr. Raamdeo Agrawal, Chairman and Co-founder at Motilal Oswal. Well, Mr. Agrawal, I wanted to ask you about the markets. Everyone's been talking about India underperforming, right, in the last 1 year, and various factors. Earnings have been great. Economy has been a little bit soft. Do you think from here on, for the next 12 months or so, investors should brace for, say, mid-teen returns on the Nifty itself? Because a lot of investors out there, they're showing the money, but last 1 year, no returns on the headline index. Yeah, individual stocks far lower. Yes, sir.
But see, investing is not about 1 year. Why you are so much focused on 1 year?
Right.
If you look at last 5 years, stock post-COVID has gone from 9,000 index to 25,000. It is almost 23-24% kind of compounded return. And that's why you're seeing actually investors are not looking at 1 year. They're looking a little longer term.
So we took a bit of a break. We had a good sprint.
See, what is a kind of a DI buying? If you look at the yearly basis, they buy 5.5 lakh crores. And I'm telling you, we'll be heading for 6-7 lakh crores in the next 12 months. So the flow is much, much stronger.
Solid.
And now with the lower savings rate, I think the attraction of the markets will become even more. At say 5, I always call it 5 and 15. At 5% in savings rate, post-tax, okay, it gives you 15 years doubler. At 15%, post-tax in equity, it gives you 5 years doubler. Whether you want to double your money in 5 years or 15 years, that's your cost. So now this is definitely getting into the head. And with the digital distribution, payment, and all kinds of digital revolution in India, now we have 202 million people as of last month. So I'm sure we are headed for at least 500 million customers in the next 5 years. So this is the biggest what do you call, reform or development or tailwind which is happening in the economy. So yes, markets will do well, but provided there is a earnings growth, and that's why this GST thing comes in picture. So without earnings growth, you can keep dumping money after money, and that will also slow down. If it doesn't, markets will do, because you are at 22p multiple. Kitna khich loge usko aap? You know. So
earnings need to show up.
So earnings needs to come. Earnings will come only if you have right kind of impetus for the demand.
Yeah.
You know, in a country like ours where demand-driven capex happens. See, because capex is expensive here, money is expensive here. So a capex will happen only if there is a demand.
Correct.
So you can't get a private capex unless there is a demand. And if there is a demand, the world will pour money, I'm telling you. You don't have to ask about it. That's why GST is very important. You increase the demand, capitalists will take care of it.
Okay. All right. You know, sir, I wanted to ask you about one of your themes that you've been very, very bullish on, the quick commerce space. You know, out there, you've got investments in Eternal, Swiggy, as well as Zepto. And, you know, that now it's gradually playing out. Some believe that maybe Eternal at more than 3 lakh crore market capitalization is getting expensive. But others believe that maybe the story is just starting. Do you think these companies, Eternal, for example, can become like maybe the Max 7? Do you think there's tremendous potential even after the big rally that we have seen?
Yeah, it's because, see, it is about, it looks simple, but it has changed the way we consume our goods and services. So there are two aspects. One is whatever is the consumption today, say grocery you're buying offline from your corner store and all, so that you buy online. So that shift is what is right now we're talking about. But second is foregone conclusion by people like you and me. There are a whole lot of consumptions don't happen because you have to put up your pant and go to buy the stuff. Who the hell is going to go? In the night, who buys Maggie at 12 o'clock in the night? In my building, most of the deliveries happen in the night at 12. All the kids, they call for Maggie and all kinds of exotic stuff, pizza and all. So clearly, if they have to pick up a car and go to buy that would not happen. So there are a whole lot of consumption in India. They were foregone, not lack of purchasing power, but lack of delivery or lack of say, reach, access. So now they have provided access. So the biggest thing is, one is the consumer habit change, and second is the massive provision of very swift and very affordable access.
Yeah, did you see that, Raamdeo, you're an investor in Zepto, one of the larger investors. They've tied up with the house of Abhinandan Lodha. So you can add for land.
Their house?
For land.
What? Land they'll deliver?
I mean, not deliver, but I mean, I think you can add some, I mean, there's some way to not transact land, but apparently you can add, I mean, land is available. You can check out land and maybe, I don't know.
Once the land records are digitized, I think 90% digitized. I mean, maybe not concerned with this quick commerce, but it is another revolution in itself.
Yeah. You think markets back to by the way, I know that you don't look at charts yourself, but you'll follow technical, analysts, etc. as well. A few at least. We had Lawrence Belanco earlier with us. He was saying Nifty new highs by the end of the year. That's his call. What is your sense?
Yeah, abhi to jitna high hua, that is of last 10, 20, 30 years. Yeah. We are going to see many highs. Forget about one high. Matlab, आपको मान लो 26,200 ऐसा कुछ हुआ था ना all time high.
Correct.
If you cross that 26,200, if not this year, next year it will cross. Not only it will cross, it will go to 28, 29,000. It will go to 30,000. Then it will go to 40,000. Then it will go to 50,000. In next 5 years, if it has to go from 25 to 50,000, how many highs they are going to do? Every day you'll keep calling it new high.
Of course, we will.
That scares people off. See what happens. I find it very funny. If it goes to 26,300, you call it new high, and the whole lot of guys, they say, oh, it is very expensive because it's new high. Boss,
But 1 minute, it will earn. But all of this is obviously contingent on earnings coming back. Earnings have to come back, right? It has to be a fix.
आएगा, कैसे भी आएगा.
But I just wanted to ask you one more thing, because there is a lot of geo-economic kind of thing also going on. You started by saying backs against the wall.
Yeah.
Was that only a reference to the domestic slowdown, or was that also a reference to US-India?
Both. US-India. See, the way the world is changing, for whatever reason, the world is changing to become much more mercantile. It is no more philosophy-based kind of a, ki, I'm a capitalist country, I'm a socialist country, I'm this friend, that friend, boss. Only it's trade. Okay? And so I have to become very... In fact, the smaller countries, they have no option now.
Right.
Multilateral, if you're a poor country, you had an option to negotiate.
You're a grouping.
Right. You're grouping the entire small countries and poor countries, they're getting preferential access into the EU market. And today, everybody is negotiating my access. See, if I get zero duty access for my textile, they are getting zero access or liberal access for, say, whiskey or whatever. So, so now it is a trade between one market or other.
Right.
So I see the world becoming big groups of countries. So US and this thing, satellite countries, that will become one group. China, their own satellites will become one group.
Yeah.
India has an opportunity to become the third polar, this thing,
Right.
Wall Street of East, okay, and consumption center of East.
Okay.
So that, see, when you go with that kind of thing, then you start doing the right things. So that I cannot be growing at 6.5% and my manufacturing grows at 3.5%.
Right.
I must get at least 6.5–7% manufacturing growth. Where is it?
Right.
Just one last question, Raamdeo ji. I know I'm getting you from 30,000 feet to here and now. Apologies for that. But 27th is the deadline. This 25 additional 25% tariff, right? It's a bit of a near-term question. Hopefully, obviously, it can't be permanent. Eventually, it'll get negotiated down. But who knows how long it'll take, right? This entire because of the Russian oil thing, the US tariffs, which is at now 50%. What do you think? I mean, is the market kind of... Market's not really reacted in any big way.
Itna kuch nahi hoga.
It's in the price.
No.
Mota.
See, you have more additional knowledge than me because you get...
But what is your sense?
Delhi. No, kuch nahi hoga yaar, aisa thodi hai. See, we definitely need more US because they're the largest, my baap hai log. They're 25% of the world consumption. So clearly we need them as badly, but they also need it. So I think the friendship, the strategic positioning we all have, apart from trade, is going to continue. So now how they will negotiate between our country and their country, time-wise, there's so much happening in Ukraine. If that gets sorted in this week or something, then in any case that becomes an irrelevant question. But I think we have kind of paired the buying right now of oil. So a lot is happening. I don't know. But I think that may not be required to be triggered.
It may not come to pass.
Yeah.
All right. All right, Raamdeo ji, just very quickly, everyone talks about Hero MotoCorp, Bharti Airtel, but I think one of the biggest multi-baggers for you has been your own stock, Motilal Oswal, 56,000 crores of market capitalization. And as you always say, many have become crore-patis because of those ESOPs. Do you think it's on its way for better times? And if you have that number, how many crore-patis?
It's about 250 to 300.
250 to 300 crore-patis because of the ESOPs.
ESOPs only, okay. Yeah. So
and it's on its way to 1 lakh crore?
Are you going to send me to jail or something?
Raamdeo ji, we wish you all the best of luck. We are wrapping up this conversation only because we know that you have a meeting, not because we have. Would love to continue the conversation. Thank you very much for dropping by and sort of sharing your insights with us on another edition of Market Masters. From Nigel and me, it's a wrap on this very special conversation. Stay tuned, more coming up on the other side.